morning and welcome to VSA Capital 5 Minute Morning Miner on Monday, May the 12th. I hope everyone had a lovely weekend because it was gorgeous. Paul, how are you?
Very nice. Thank you. Very fine. It's gorgeous right now, too.
It is, yep. Right, let's start today. I'll probably do this one, Paul, because it's an intention to float. We always like to see an intention to float. God, we don't see nearly enough of them. This is quite interesting. It's called Cobalt Holdings. And well, what it does is a bit of a giveaway in the name. It's a sort of yellow cake equivalent, but for cobalt. And Glencore are going to cornerstone it with about just under $25 million for about a 10% stake. So it's quite a big IPO, about a 250 million IPO, and they're using Citi. The problem I have with this is that obviously we've had one of these before called Cobalt 27, and that didn't really work. And then, of course, a lot of the Glencore guys jumped out of Glencore and went into a business called Jervois, which was on the ASX, specializing in cobalt mining, and that didn't really work. And one of the reasons it doesn't really work is that obviously cobalt is being manufactured out of batteries. We're moving from NMC to LFP. And in fact, there'll be batteries even more change going forward in the future, I think, and that cobalt probably isn't going to be needed. So my concern here is that actually the reason Glencore are getting this is just a way for Glencore to sort of park their own cobalt and have a source of it so they can trade it if it's needed. That's my view. Do you have any comment on that, Paul?
Yeah, I have some issue with it, too, for the same reasons you brought. I'm not sure that it'll be as critical to the sector or mineral sectors, as you say, because cobalt being engineered out of the battery sector, which is the really fast growth one in volume for cobalt in this point. And I'm just wondering if something else like tin might be better, actually.
Well, we do love tin. I mean, it's interesting. It's a slight red herring. There's a few things around in the sort of battery space. I see the National Wealth Fund is putting money into a gigafactory in Sunderland. The only problem here is that they're backing the operations of AESC, which are very good, by the way. But the point is that it's actually basically a Chinese company, Envision, and well, I mean AESC is 75% Envision, 25% Nissan. Look, it'll create jobs in Sunderland, but it's a gigafactory that's basically going to take supply out of China. The supply chain will come out of China. China is so much further ahead of us in batteries, and so they are moving to LFP. Anyway, that's a complete red herring, really, but it's all about batteries. Paul, what else have we got today?
Well, we also had Q1 results listed or reported by two gold companies listed here in London, Caledonia Mining and Altyn Gold, Altyn being a prior VSA client some years back. Specifically, for Altyn Gold, in the quarter, mined and milled ore was up 34% year on year. For a production here of 208,000 tons. And, excuse me, it would have been quarter on quarter. That would be a misprint there. So 208,000 tons, and then up 57% year on year at 205,000 tons. Otherwise, we had stable grades at just over 2 grams per ton and just shy of 85% recovery that they're reporting here. It's the gold price which has really helped them all out a lot, with revenues up year on year at 61% from 15.7 million a year ago to 25 million in this latest quarter. And that was on a 36% year-on-year increase in their realized gold price. So they also had not quite all of the gold that they had produced had been sold during the quarter, so that will also be reflected probably into the next quarter as well. So looking very strong with Altyn at this point.
Yeah, IDAR's done very well there because for a long, long time he struggled to get the financing to really develop the mine, didn't he? But it just shows the effect of a high gold price. It still is a very, unfortunately, illiquid stock, which makes it quite tricky to trade. But I must give IDAR a call. Anyway, move on to Caledonian.
Yes, that's right. The gold price also helping them out a lot too, with gold revenue in the latest quarter just over $56 million versus a year ago at 38.5 million for an increase of 46%. Net profit though just goes way up here with an increase of almost 500% on year-on-year comparison to just shy of $9 million. Net cash from operating activity was at 13.3 million for an increase of 171%. And they also had pro forma net cash position rise to 18.6 million as a result of post-quarter end the completion of the sale and leaseback of the solar power plant they built for $22.4 million, and that was sold last month. And the other thing they made sure to point out too is how much of an improvement that made to the coffers of the Zimbabwe government in tax, with quite the improvement there of not quite 200% on a year-on-year basis. So Caledonia yet again proving you can make money mining in Zimbabwe.
You can make a lot of money mining in Zimbabwe, actually, as long as you do it correct. So yeah, but Caledonia is a good proof of it. Obviously, the one that we all know that's busy out there is also Premier African Minerals. Right, unless you've got something urgent, Paul, I think we'll call it a day there.
Well, that'll do it for now.
Okay, thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.